Hello guys and welcome back to another crypto update. We are back in Malta after our 4-day vacation. They were very beautiful but not for crypto. So let's dive in and check what is happening right now. There are some good things and some questionable things. Okay, so on the monthly we are as you can see, we have these four circles that were the previous two bottoms, excluding the 2020 crash, because here it had different values. On the RSI, we can see some similarities. First of all, we have this line here on the RSI that on both bear markets of 15 and 19 here, or 18, it depends, they were the same right now. Okay, we have the same value around 43, so we are touching this line right now on the monthly chart, and those values were actually the bear market bottoms. So this chart, in confluence also with the 50 green SMA, which we are currently touching, suggests that this is the bottom for Bitcoin and we are due to a push to the upside. So that's it for the monthly chart. Now let's move some detailed on the weekly and on the daily. So first of all, on the daily, we can see that if the daily close will close like this is a very good candle after a market crash because it is a spinning top, or let's say it's an indecisive candle. You can notice that after the big volume from yesterday with a candle of about minus 15% to the downside, today 2 hours 40 minutes away from the daily close, we have a very good big volume candle, although we have this indecisive candle. So those things in confluence with each other tell you that we are momentarily, I'm not saying we are going to the moon, but momentarily we are seeing some buying pressure coming in. So this candle, if closes like this on the daily with this volume, or of course it will get slightly above, uh, I'm uh, I'm expecting a push to the upside, maybe to 23 or even to the 25 to retest this megaphone break that we had earlier. So a pullback after the break, right? If that happens, and I'm very confident that it will happen, and we manage to get this push at a later stage in this week and close like that, that would mean for the weekly close to have, first of all, a very high candle volume candle, okay? And I'll explain a little better in a few moments. And that would mean that we close around here the weekly candle. So it would mean a very long wick from the downside and a small body. That is very bullish, of course, being supported on the 200 SMA. That is very bullish. In confluence with the volume candle, the weekly volume candle, with just 2 days minus 3 hours, because we have still 3 hours for a complete 2-day close, you can notice that the volume, let me zoom in, the volume candle is already reaching the high of the whole year. After the May crash here, you can see that this past year the weekly volume candles were at the same average, at the same height. And this week's, with just 2 days, not even 2 days, we already reached those highs. So I'm expecting the weekly candle to close at least this high or even higher. So let's say we have the weekly close, of course, with high volume, supported on the 200 SMA with a long wick from the downside, because the daily is suggesting that we've got a push. Of course, on the daily we can have a push, but I would like it in the last moments. I would like to have that push on Saturday and Sunday. So we closed that weekly candle with a high wick to the downside. Of course, nothing is set in stone, but I'm expecting something like that. And that would mean that we just faked out, we shaken out all the weak hands, and we would be due for a push to the upside. I'm very confident in this theory, but of course we can confirm this theory after we close this weekly close. We can notice also that on the RSI we have this falling wedge pattern, and we are currently at its bottom of the trend line, of the support trend line. So it is another thing in confluence with all these things that I talk about that is suggesting a push to the upside. Of course, how much we go to the upside is still to be seen, but after this weekly candle we could have a more detailed perspective of where the price action will go. Now moving to answering a question of a fellow follower, Mark Johnson, shout out to you, hi. He asked if we have met the 4 criterias of this video, the scary bottom revealed on the 9th of May. So it's been about June. It's about two months. 2 months? No, one month. Sorry, 1 month ago. So we talked about that the bull market will start when we hit the target of the bear flag that was right here. Okay, so we hit it, yes. Eventually we'll hit the 200 weekly SMA. We hit it and we are currently trading slightly below it. Also a big weekly volume candle, which I think this week will be, although we already had one with a very good wick that I'm talking about. Let me zoom in. I would like this week to close like this on the 200 SMA, and that would be very bullish, but we didn't get the fourth one. The fourth one, I told you that the bull market for me will start when we break here this channel, this blue channel. For me, that would be the start of the bull run. Of course, it wouldn't be the bottom would be around here, so you would have been lost a good profit area or a good accumulation, to better say it. But to be safe, if you are on the sidelines, I would enter right here when we break this channel. Or at least if you have a dollar cost average strategy, you can, if we close this weekly candle as I explained just a moment ago. Something to pay attention for, something that already had happened on the 3 daily time frame. It is currently in the far stages, but it is actually getting a picture of it, and I will tell you what I'm talking about. So we have the 50 weekly moving average, we have the 200 weekly moving average that are currently pushing against each other. So in the far weeks ahead, we can see that they are converging to each other. So my theory also will be that we are expecting a push, maybe even breaking here, but we need eventually to break the 50 SMA. If we remain below the 50 weekly SMA, it would just mean that we're gonna trade between these moving averages, getting squeezed, and I wouldn't like this because we are in a bear market, and getting squeezed between the 50 and the 200 moving averages wouldn't be the ideal for the long-term bull market. But that's another thing for a few months ahead. So for now, keep an eye on those things that I talked a few moments ago, and see you for the next update. Bye bye.